Hello, mate. Have you heard about the bloody whitey pound? That's right, mate. It's collapsed, bro. The bloody pound is down, and the dollar is up, mate. Looks like we're going to have to cancel our U.S. vacation holiday. Willy Wonka. Welcome back to Strongman Personal Finance. My name is Christopher Bentley. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And that clown almost hit my car. Anyway, we got to talk about VT and currency risk. Now, I don't know if you knew this, but the Vanguard Total World Stock Market Index, ETF, VT, holds about 40% international stocks. And what happens is if one currency strengthens against another, it has an effect on your returns. Case in point, the dollar my aller, is now stronger. Everybody is fleeing to the US dollar for a variety of reasons. Well, when the dollar goes up relative to other currencies, if you have earnings in another currency and you then convert that earnings, that currency to US dollars, you get fewer dollars. So when the dollar goes up in strength, if you have international exposure, you get hurt. Now, a lot of people are probably laughing because they're like, oh, well, see? You should just own U.S. stocks, bro. Just buy U.S. stocks, bro. Because look at the dollar. Every other currency relative to the dollar, at least what I've seen, has been absolutely wrecked. The yen, the pound, the Australian dollar, everything. Absolute freaking wreckage. Well, I still think it's complete and utter BS to only hold the United States. Number one, even if you believe the dollar is amazing, if you own only VTI, you're basically exposing yourself to one single currency. Now, yes, some of the larger companies in the United States have global operations, and they too get affected by currencies. But the vast majority of your portfolio, if you're only in VTI or VOO, is based on the US dollar. And while the US dollar is getting stronger now, can you tell me that at some point in the future, the US dollar might significantly weaken? I don't know. It could happen. Can I predict it? No. But the reassurance that I've diversified my holdings, my investments, and my currency exposure across the entire world helps me sleep better at night. Because if you concentrate yourself in one thing that everybody else is buying, you could potentially have trouble in the future. Now, people think the United States is the end-all, be-all, and they always point at past performance. Okay, great. To me, that's the dumbest analysis you could ever freaking do. You literally filter on past performance, and you say, well, U.S. stocks did better. Well, what carried U.S. stocks, ladies and gentlemen, in the last decade or two? Mostly tech stocks, large cap tech, Facebook, Microsoft, Apple, Amazon. Well, guess what? U.S. tech stocks have had an amazing run. But in the future, they could potentially get wrecked, annihilated. Case in point, Meta. Meta was in the 300s. And now it's trading at $134 or something like that the last I checked. You don't think that can happen to Microsoft or Amazon or any other company that suddenly has a decline in projected revenue? It can happen, okay? So if you're investing in just U.S. markets, you're basically concentrating yourself pretty heavily in a few large cap stocks that have massively outperformed. So why is the dollar getting stronger? Well, I'm not a currency expert, but my thoughts are, number one, there's a lot of fear in the world, okay? There's a war in Ukraine. It looks like it's going to last for a long time. It looks like there's pretty heavy inflation, across the world, or at least in most areas. And if you want a safe place to store your money, would you want to put it in Zimbabwean dollars? Would you want to put it in euros? Maybe. Or would you rather park it in the United States of America? Well, if you believe the United States is the safest bet, which for now it might be, what you do is you would sell your currency and exchange it or buy US dollars. Because currencies are just supply and demand if they're free floating. If a bunch of people are buying the currency, if there's more buyers than sellers of the currency for whatever reason, that is what causes the currency to strengthen. If a bunch of people are selling a currency, there's more sellers than buyers, the value of the currency declines. Now, the pound has been absolutely wrecked. And from what I can glean from the whole situation is that the UK has massive inflation and their government has now stimulated the economy. It looks like they're cutting taxes and doing other crap, which is going to potentially result in more inflation. So people around the world are looking at the land of the Willy Wonkas and the chocolate factories, and they're saying, man, this pound, there's going to be so much inflation, this pound is going to be freaking worthless. So they sold out of it. But at the end of the day, I don't claim to be a currency expert. I know the basics, supply and demand. We also have the Federal Reserve raising interest rates in the United States. So if you want a high yield or a good yield on an investment, well, why don't you buy a U.S. Treasury in U.S. dollars? Because you look around the world, a lot of countries aren't doing that well. And if U.S. Treasury yields are going up, that stimulates demand for dollars to buy those treasuries. It's a lot of reasons it's happening. Okay? But you always need to think about the risk of being in one country. And you need to look to the future, not the past. In the past, U.S. stocks have outperformed. Did anybody predict that? Maybe some did. But I can guarantee you, the vast majority of you, the reason you love U.S. stocks and you buy U.S. stocks and you pat yourself on the back because you think you're a genius is really because you just have home country bias. You're born in the United States. You're raised in the United States. You live in the United States. And because that's the case, you buy your own stocks. You buy the stocks in your country. It makes sense, right? That's home country bias. Don't sit there and think you were a genius because you bought U.S. stocks over the last decade, when in fact you were just displaying home country bias and looking at past performance. And remember, the United States has done very well in the last century. I mean, we won World War II. The rest of the world was destroyed. Half the world fell under communism. USA was the superpower, the one and only superpower. We benefited greatly in the last century. We crushed it. But do you think that's going to continue in the future? Do you think the United States is going to be the only superpower in the next 10, 20, 30 years? Do you think most of the growth of the world is going to come from the United States? I personally don't think so. I think the United States is going to have a shrinking and shrinking and shrinking share of GDP. And I think that's going to have an adverse effect on the future performance of U.S. stocks. Doesn't mean they're going to be bad, but I'd rather hedge my bets, okay? And if the USA isn't the only world superpower in 10, 20, or 30 years, what does that say about the currency? Will it still be respected? Probably. But will it be the only currency potentially that people flee to? I don't know. That's the whole point. Nobody knows the future, okay? So, continue to filter on past performance and, laugh at VT because you really think you're smart. You really think you're clever by filtering on past performance. And you think I'm so dumb that I can't filter on the last 10 years of returns and see that U.S. stocks have outperformed? I know they have, okay? That's like kindergarten level analysis. You clowns. And don't forget VT has 60% U.S. stocks. And if I'm wrong and international continues to suck, well, guess what? VT will have more and more and more U.S. stocks as a percentage of assets. You can't lose. Well, I guess you can mildly underperform. But guess what, ladies and gentlemen? If you're saving diligently, it won't even freaking matter. If you're shoveling tens of thousands of dollars away a year in VT, you're going to be fine at retirement, even if you get like half a percentage point less. But you also protect yourself from the downside of U.S. stocks being in a massive bubble. But, past performance, I can check a performance chart. U.S. stocks are amazing. I'm so smart. Blah, 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 blah. All right, guys. Cheers.